All right, let's talk about probably the single most stressful part of buying a home for most people, that giant, intimidating pile of paperwork. Today, we're going to pull back the curtain on the powerful TRID rules, rules that were specifically designed to protect you, the homebuyer. By the end of this, you'll know exactly what to look for before you sign on that dotted line. Let's jump in.
I mean, if you're even thinking about buying a house, you know this feeling, right? You're staring at this massive stock of documents, and it's all legal jargon and fine print. It is so easy to feel completely overwhelmed. But what if I told you that the whole system was overhauled not too long ago to fix exactly this problem?
And check this out. This slide shows you everything you need to know. Before 2015, it was kind of the Wild West. You had at least 4 different forms. They were all confusing, they overlapped, and frankly, it made it way too easy for weird fees to pop up. Now, all of that has been streamlined into just 2 core documents, the loan estimate and the closing disclosure. So much cleaner, right?
Now, this big simplification is all thanks to something called the TRID rule. You might also hear it called by its nickname, know before you owe, which I think is perfect. The entire point of this rule is to give you, the person actually taking out the loan, a crystal clear picture of your loan terms and, crucially, more time to review everything before you commit.
So your whole journey really starts with the first of these 2 big documents. It's called the loan estimate, and you can think of it as your official sneak peek of the loan you're being offered. The loan estimate, or LE as you'll hear it called, is basically the official price quote for your mortgage. It's a standard 3-page form that lays out all the essential numbers, your interest rate, your monthly payment, your closing costs, in a really clear, easy-to-compare format. This is where you see all the estimated costs in one spot. And listen, they don't mess around with the timing here. The moment you submit a complete loan application, a clock starts ticking. Your lender is legally required to get that loan estimate in your hands within 3 business days. That's not a suggestion, it's the law. It makes sure you get the info you need right away. Now, this is where you get some real power. The key terms you see on that loan estimate, they are generally locked in and binding on the lender for 10 business days. This gives you a guaranteed window of time to shop around, to compare that offer with others, and to really think about it without any pressure of a last-minute bait and switch. So, what does this all really mean for you? Well, it means this document is packed with protections. For one, a lender can't charge you for anything except a credit report fee before you have this estimate in hand. They have to be totally upfront about your rate lock status, and they have to clearly warn you about sneaky things like prepayment penalties. It's all about transparency from day one. Okay, so let's fast forward a bit. You've reviewed your estimate, you've gone through the whole underwriting process, and now you're approaching the finish line. This is when you get the final bill, which is called the closing disclosure. The closing disclosure, or CD, is the final itemized breakdown of your entire loan. It lists every single charge, every single credit, the whole shebang. And you know what its most important job is? It's designed for you to compare it line by line right next to your original loan estimate. This is your chance to make sure the final numbers actually match the quote you were given. And this right here, this might be the single most important number in this entire process. Your lender must give you the closing disclosure at least 3 full business days before you're scheduled to close. This is your mandatory, legally required review period. Gone are the days of being ambushed at the closing table with a giant stack of papers you've never seen before. Okay, but that brings up a really good question, right? What if some little thing changes? Does that mean your closing gets delayed and that whole 3-day clock has to start over? Well, thankfully, the answer is no. The rule is actually really smart about this, so it protects you from major surprises without causing unnecessary delays. In fact, only 3 major things will trigger a new 3-day review. 1, if your APR, your total cost of borrowing, jumps up by a significant amount. 2, if the lender suddenly tries to switch you from, say, a fixed-rate loan to an adjustable rate one. Or 3, if they try to add a prepayment penalty out of nowhere. For almost anything else, you can proceed as planned. So this brings us to the most powerful part of the whole rule, actually comparing that initial estimate to the final bill. How much can those numbers really change? Well, the system has very specific limits, and they're called tolerances. Yeah, tolerances. It's just a fancy word for how much wiggle room a lender legally has on certain fees. And it's actually pretty simple. It all breaks down into 3 easy-to-understand categories. Okay, look at this table. First, you have zero tolerance fees. Think of it this way. If the lender or broker controls the cost, like their own fees or the appraisal fee, it cannot increase, not by 1 penny.
Then you have a 10% tolerance bucket for costs like recording fees. The total of all these costs together can't go up by more than 10%. And finally, the no limit category that only applies to services you shop for all by yourself, like your homeowner's insurance policy. So what happens if a lender makes a mistake and they overcharge you on one of these fees? Do you have to fight them for it? Nope. The rule is clear. They have 30 calendar days after closing to cut you a check for the difference. It is an automatic refund, plain and simple. Whew, okay, that was a lot of info, I know, so let's boil it all down. What are the absolute must-know key takeaways from all this?
Here's the bottom line. The loan estimate, or LE, is your price quote. You get it within 3 days. The closing disclosure, or CD, is your final bill. You get a mandatory 3 days to review it. And you need to compare the two because those powerful tolerance rules protect you from big surprise cost increases. The whole system is designed to put you in the driver's seat.
So the goal here was to take that feeling of dread and turn it into a feeling of empowerment. Now that you know the rules of the road, that mountain of paperwork shouldn't seem so scary. So the real question is, how will you use this knowledge to feel more confident and get the best deal on your journey to buying a home? Because now you're not just a signer, you're an informed consumer. Thanks for watching.